Hey, welcome to the closing beat, everybody. Happy Tuesday. Got the day right there. We should be rolling up here now in a second. Seems a little delayed for some reason. Let's see. Are we rocking and rolling? Is it up and running? Maybe I'm just not seeing it there. I see you guys making comments there. Welcome to the closing beat. I'll get started anyways. No graphics today because, well, there was a little hitch in the get along there, and I just didn't want to go back and do it again. Needless to say, save your work. When you do something, save your work. Anyways, this is our stock market update show, usually a little more flashy, but we're financial advisors here at Jazz Wealth. And we have a game going on. If you go to our website, go to the top, click on Guess the Dow. Just a fun game. You want to guess where the Dow is going to close next week. If you're the closest without going over, we'll send you $100, but you can play whether you're a client or not. Doesn't matter to us. So let's dive in here to this market here. By the way, next week, Monday, Tuesday, and Wednesday, no closing beat. Might do a little something different for you guys, but I'll be out of town, so no closing beat for that. Let's take a look at the stock market. So we'll start with the S&P 500. The markets have run up a hill. Remember, I made those comments. The markets ran up a hill. If you run up a hill, you're going to want to take a break. Well, today we tried to continue running up that hill, but once again, the markets want to pull back a little bit. Got some data on that I'll share with you here in just a moment, but that's basically where we started. You got small business sentiment, there we go. Small business sentiment came in higher than expected. That helped initially to sort of boost the markets. That's 4 straight months of positive business, small business sentiment, meaning they send out a survey, and I think there's 12 questions on the survey. They say, how do you feel about your the following categories? Well, quality of labor was their biggest issue. Finding good quality people to fulfill the work that they have for their business was the biggest problem. Taxes came in at number 2. It always ranks near the top, but taxes came in number 2, and government red tape came in number 3. Inflation and interest rates were the least of small business concerns. So that helped start the markets higher. Oh, small businesses are doing well. They're the backbone of the economy. All right, that's good. But hey, the markets have run up a hill. They need to take a little bit of a break. I think you guys now get that. You understand that, and that's okay. So, because of that, you had basically a flat day, whether it's the Nasdaq, the S&P, the Dow, basically just all flat of a day here. Now, if we look at the Dow, you got 3.5% until we get back to the all-time highs. That's a considerable length here, and the markets are taking a break, at least in the short term, but still got 3.5% to go. S&P's got about 2.8% or so to get back to this prior high. So we're close, right? We're just off those all-time highs, but we need a few good days in there, and I think it's pretty difficult to say that that's going to happen this week. The Nasdaq has the furthest to go. It's got about 5% to get back to these highs. Tech stocks are helping out, of course, but Nasdaq's got a little bit more work to do to get us back to those highs. All right, little data for you. There are only 4 other times in history that the S&P 500 has started as strong as you see it start for the month of June. Look at all the Junes, go back to the entire history of the S&P 500, pick every June, look at how it started. There are only 4 other starts that are better than what we've done here, right? So that's pretty good. Now, if you look at the study of those 4 other times, there's only one time that the S&P has finished the month out negative. It was a good negative month, by the way. It was almost 7%. But that just shows you, hey, the markets are off to a good start. That's not a record, but it's something that certainly stands out, as there's only 4 other times in history this has happened. The bad news is, historically, over the next week, the market is negative by about 0.2%, right? So if you had to make any bets one way or the other, based on what's happened so far with this move in the market, about 5%, at least at the highs today, about 5% to start the month of June. Typically, we bleed back just a little bit. The good news is we don't bleed back 5%, right? So we just tend to pull back a little bit, further lending more credit to that sort of analogy. Hey, you ran up a hill. It was a really steep hill. Congratulations. You made it close to the top of the hill. Take a break. Sit back and take a break for a little bit. So that's where the stock market is at the moment. You got 55% of all stocks in the S&P 500 above the 50-day moving average. That number's not really changing. It was kind of a flat day, so a flat change on that. It was 54.4% yesterday. I just said 55 to make it easy. So basically all the stocks that were above the 50-day pretty much have stayed there. About a quarter of those are financials. So if you look at the financials there, we just did a class on that, like the undervalued or sort of fairly valued sector there. Tech stocks are standing out there. We'll go through a few of those here since we're kind of doing things a little different today. And then basically you had 51 new 52-week highs today. It was a good mix. Financials, services, you had healthcare in there. Continues to be a good mix of stocks that are pushing two new all-time high, or new 52-week highs. And you only had two new 52-week lows. Those were both in the financial category there. Now, if you look over here on the dojo, if you're one of our customers, you could dive in there and participate with us. Look at the sectors, the sector ETFs near the top. If you're not familiar with this, these are all ETFs that track different sectors, and there's some other things in there too. But if you look up at the ones that did the best today, those were your relative weak areas. So we kind of mentioned this yesterday, relative strength, relative weakness. They're both getting a bid lately in this last bounce here. Well, today the better performers were things like retail. This is considered a relatively weak area of the market, meaning it did sell off in May. It sold off more than the market, but since then it hasn't bounced as much. It's really struggled to bounce. And so today that was one of your better performing areas. Money went in that category. Regional banks have tended to be rather weak here. They haven't bounced with the market in this last go around since the beginning of last week, June 5th. And so they got a little bit of a bid today. They're at the top of your list. Communication services, they've done okay, but not quite as strong as the rest of the markets here. So that's probably the main takeaway from today is the relative weak areas were the areas that got the bid, meaning they got the money. The bulls came to play in that area. Metals and mining, that was towards the top of your list. I don't have it on this one here, but metals and mining got 1.5%. That'd be one of the better performers today. And if you like commodities as an ETF, that's tough to do. It's a tough ETF, but the DBC is a commodity-based ETF, also a better performer today, and was a relatively weak area of the market. So now you know there. All right, if you go over to industrials, we use the XLI. That's down towards the bottom. Well, that is on the bottom of the list there. 0.86%. A lot of that has to do with Boeing and the whole United Technologies thing. If you take a look at Boeing, American Airlines said they're going to hold back on any flights for their 737s until after like September 3rd, which takes you all the way through the busy summer months. Boeing hit a little bit, continues to be kind of hit a little bit on that. Then you got the United Technologies news that they're going to merge. There you go. There's UTX as the symbol, down 4% today. This was the Raytheon United Technologies thing from the other day. United Technologies makes up about 4% of this guy down here, this XLI. Boeing makes up about 8%. And so right there, you got 8% of the whole sector weak. Okay, that's pretty good. You got 4%, United Technologies, down 4% on the day. And then you had Lockheed Martin. We had a lot of them lower on the day, but Lockheed Martin down 2%. That happens to also be about 4% of this whole category here. So you can really feel that sort of pressure to the downside. I think it's okay in the short term. Utilities continue to pull back from their overvalued and overpriced area there. So a normal little pullback here in the even though rates did drop again today just a little bit, just a little pullback for utilities. I think that's okay as well. We just did a class on that to sort of explain what was going on. What else? I think I've done sector-wise. Let's go through some of the stocks here. Guess I got to talk about Beyond Meats again. Lost 25% today. Wow. So combination of obviously people wanting to be short. You had a lot of short covering the other day. It sort of disguised itself as maybe some bullish traders in there. But you also had JP Morgan come out and downgrade it today. JP Morgan essentially admitted it was overpriced. They said, we can't keep up with the price targets. It's not worth that price target anymore, and it's well past our price target. So they downgraded the stock, said it is severely overvalued. Boeing, we covered that. That was the American Airlines saying that they were going to delay, or they're going to hold back there at least till September 3rd. They're not going to be able to fly those 737 MAX airplanes. CREE down just a little bit on the day. They lowered their guidance. They're in the chip space there with the Huawei ban and everything. They're just kind of throwing their 2 cents out there. More importantly, Crocs, right? Do you love your Crocs? The stock was up 2.5% today. Basically, they said tariffs won't have any effect on us. We're going to continue to make our Crocs. Everything's going to be just fine. Aren't they just rubber? Like, don't they just squeeze them out of a mold or something? I'm not sure I understand that one. Anyways, Crocs is, yes, a public company. It's been a tough one, but it's a public company. CVS down 2% today. That's in the news. The CVS-Aetna merger. That's right. CVS in the news. Just another federal judge throwing up his hand about the merger with them and Aetna. He sort of put his stamp on it, but he's technically allowed to still block it. We're getting into legal stuff here, but that put a little concern into CVS, and that's why it's really struggled to move off those lows. Having a hard time sort of putting all this behind them and moving on. Grubhub up off the lows, 8% higher today. Amazon to start some food delivery service there as well. Oh, no, Amazon's ending their food deliveries. I was going to say, I don't recall that. Amazon's going to end their food delivery service. They said the competition's not there. There's not enough money for them to be made there. Obviously, that's a good sign for Grubhub if you like that sort of thing and you have your meals delivered to you. There you go. Intel's buying Barefoot Networks if you care. So the stock maybe is just a touch higher today. It's basically flat, not a big deal. Tomorrow, you got earnings from Lululemon. So pretty flat ahead of that. We're expecting 70 cents a share. And what's the other? Restoration Hardware. That's right. So more stuff coming. We'll hear about the tariffs from them. This is an ultra high-end furniture store. Like beautiful stuff. I don't know why their furniture looks so much more beautiful than another one. But oh my gosh, this is pricey. I cannot spend my dough on this furniture, man. I can't do it. Stock was up by 1%. They're expecting $1.54 in earnings tomorrow. We'll cover it. Here, of course, on a closing beat. I'll be happy to answer any questions if I can while we're here. I see some technical comments on that Beyond Meats there. You guys talking gap fills and stuff. That would put it back pretty much under 100, which would still be more than a fair price for this stock. You guys know where I stand on that. I wish them well. Like I said, I'm positive on good companies doing good things, but not the stock price. That's a tough one. Yeah, Tesla shareholder meeting coming up here. I'll get out of your way, but yeah. So Tiagio, you're asking about, you're going back to old PG&E. This is a highly news-driven stock here, or has been. Why does a stock like that bounce up and down 3 to 5% a day? Went from 17, 24 back in the last 2 days. It's just a volatile stock. They've got a lot of news coming out about what they're doing going forward, and so every little blip of news causes that. And so I would agree. You normally see this type of movement in a much higher priced stock, but you got a lot of positioning going on. Think about everybody that's been in this from a mutual fund perspective, some of the index funds that it's included in. Think about these guys having to reposition and move and sell out their shares. Me and you want to sell 100 shares of something? No big deal. We press a button and it's done. When you want to sell millions, tens of millions of shares, you don't get to do it all in one button press. So there's a lot of repositioning going on here. I don't keep up with this stock in particular as far as what they're doing. As far as like the change in ownership and the institutional ownership there, I guess I could. But that's basically it, and it's a tough one because you've got such volatility in really a low, what is it, $20 stock overall. So it's kind of tough there. All right, let's see here. Lulu. Is Lululemon Chinese exposed? Well, so Lulu gets, do I have it here? Lulu gets about 28% of their overall revenues from overseas. So, yeah, they're definitely exposed to some extent. I believe in their last earnings call, though, they said they're not doing a whole lot there. The whole textile sort of area has moved to Taiwan. Taiwan's like the next great China in terms of the textile manufacturing, and Bangladesh too, I guess, if you sort of like that thing. India a little bit. Anyways, yeah, he better have something good. I saw the stock was just a touch higher today, was it? Did it finish higher? Yeah, 2%, so a good start to that. You can expect some pretty good volatility tomorrow from Tesla, especially after hours. If you follow after hours, there's your excitement. Yeah. Oh, nice. Yeah, so you're getting that higher premium. I like it. Yep. And that's because of that news-driven thing. It's the same reason, like if you look at Lulu, if you were to look at selling sort of at the money or maybe a strike or two above at the money, Lululemon calls, you're going to see a much higher premium just because there's that sort of unknown volatility risk going into tomorrow, which they don't report till after hours tomorrow, so you at least have a chance to check that out. Cool. Do you think Chinese stocks like Tencent and Alibaba are going to move higher with the U.S. market or continue downward due to... Well, they have other concerns over there, right? So a lot of people attribute like Alibaba and things like that to the tariffs and what's going on, but they have other concerns there. Now, JP Morgan said the other day that Alibaba was priced very fairly right here, even with the trade war concerns. So I have to kind of say, well, that's what they said. In my opinion, China, there's a lot going on over there. They have more concerns other than just the tariffs. Now, what they did overnight to kind of shore up their currency, that was impressive. That was a lot more than it was expected if you happen to follow that. But yeah, I can't actually say, like, do I think it goes higher or not? I think JP Morgan agrees that things are looking higher for these stocks. Yep. Well, I think, where's my screen there? I think I covered everything for you. You guys talking about Tesla? I love it. When is that? I'll get out of the way here because it's coming up towards that. Nice. How do interest rates affect bond funds? Almost instantly, if that's the question, especially on Fed rate day. Can be volatile there. And now, I don't know if you mean, do you mean bond ETFs or bond mutual funds, things like that? Bond mutual funds tend to be a little bit slower because they have a different cash component to it. That could be a video topic. But yeah, they've been certainly been volatile lately, especially the ETFs. I would agree. Look at some of those in there. You like the solar roof idea? I like it. Yeah. It'd be great down here. I don't know if they're down here. Anyways, that's all I have for you. We'll wrap it up there. If I helped you up in some way, check us out at jazzwealth.com. That'll be the end of today for me. We'll be back tomorrow with graphics and everything. Enjoy the rest of your day. See you then.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.